Hello everyone, welcome back to Stock Market Meridian. Today is 17th August 2026 and you are watching today's pre-market report. Let's begin with global markets. Starting with the US markets. All major indices closed in red and at present, US index futures are also trading in the negative zone. Moving to the European markets. Only the DAX index closed in green while the remaining two major indices ended in red. Now looking at the Asian markets. Japan, China and South Korea markets are currently trading in the neutral zone. So overall, global markets are indicating some negative sentiment today. Now let's move to commodities. US WTI crude oil is currently trading around $81 to $83 per barrel, while Brent crude is trading near $89 to $91 per barrel. On Friday, Indian crude oil futures ended 0.6% higher, while natural gas futures closed with nearly 1.2% gains. In the precious metals segment, Indian gold futures closed nearly 0.7% higher, while international gold futures are currently trading in the negative zone. Indian silver futures ended with just 0.2% gains, while international silver futures are also trading in the negative zone. Now coming to the Gift Nifty. On Friday, Gift Nifty closed around the 24,423 level, and today it also opened around a similar level. This is indicating a muted start or a slight gap up opening for our Indian markets. Now let's check ADR data. On Friday, HDFC Bank and ICICI Bank ADRs closed in green. However, Reliance Industries, Wipro, Dr. Reddy's Laboratories and Infosys ADRs closed in red. Among them, Infosys ADR fell nearly 2.6%, indicating strong negative sentiment especially across the IT sector. Now, moving to FII and DII data. On Friday, institutional activity remained very low. FIIs bought just 508 crores while DIIs bought 356 crores. So, although the activity was weak, being on the neutral side is still much better than seeing heavy selling pressure. Now, let's check the economic calendar. On Friday, India's WPI inflation came in below both expectations and the previous level. India's foreign exchange reserves increased compared with the previous week. Meanwhile, US retail sales data showed some weakness, which could be a negative signal for the US economy. For today and tomorrow, there are no major economic events scheduled. Now coming to the geopolitical updates. The Strait of Hormuz is once again at a dangerous tipping point. An oil tanker was reportedly targeted, diplomatic talks are facing difficulties, and US President Donald Trump has made an unprecedented statement regarding the waterway. Trump warned that he could soon declare the Strait of Hormuz as US territory, while also threatening economic pressure against Tehran. Reports also confirmed that an ADNOC, Abu Dhabi National Oil Company vessel, was hit in the waterway. And this is important for markets, because any disruption around the Strait of Hormuz can directly impact global oil prices and energy supplies. Iranian Foreign Minister Abbas Araghchi said Tehran is discussing shipping corridors with Oman, but warned that reopening the waterway depends on the US honoring the June MOU. Meanwhile, behind the scenes, high-level diplomacy is also continuing. US envoy Jared Kushner held discussions with Hamas leadership in Egypt regarding a Gaza ceasefire framework, with talks also scheduled alongside Israeli Prime Minister Benjamin Netanyahu. The USS George Washington has also arrived in the Arabian Sea to relieve the USS Abraham Lincoln following concerns over prolonged naval deployment. At the same time, Israel launched airstrikes in southern Lebanon, Yemen's military escalated operations against Houthi rebels, and Qatar denied reports that it was holding downed Iranian pilots captive. So, geopolitical tensions remain elevated and oil prices will be one of the key things to watch today. What do you think about these developments? Let me know in the comment section. Now, let's move to the important company updates announced after Friday's market close. First important development for NBFCs. Major NBFCs, including Bajaj Finance, Tata Capital, and Shriram Finance, are seeking an urgent meeting with the RBI over its proposed restrictions on revolving credit facilities. The RBI's draft guidelines propose allowing NBFCs to provide only term loans while restricting revolving credit products. The industry says these restrictions could impact credit products with an aggregate AUM of more than 2 lakh crore rupees. NBFC representatives are preparing a formal representation through the Finance Industry Development Council. The industry also argues that around 90% of revolving credit lending goes toward MSMEs and individual borrowers. According to NBFCs, removing these facilities could increase borrowing costs and give banks an unfair competitive advantage because banks can continue offering working capital and overdraft facilities. So this is an important development to watch, especially for the NBFC sector. The company is planning an aggressive expansion with 21 housing project launches across major Indian metros by March, carrying an estimated revenue potential of around 24,000 crore rupees. 7 new residential projects across MMR, Delhi NCR, Pune and Bangalore will cover around 5.9 million square feet with a potential of rupees 9,850 crore rupees. Another 14 project phases covering 9.7 million square feet are expected to add around 14,210 crore rupees in revenue potential. Importantly, Lodha is also making its strategic entry into the Delhi NCR residential market this fiscal year. The company reported strong quarterly performance. Net profit doubled year-on-year to rupees 1,373.1 crore rupees compared with rupees 675 crore rupees last year. Consolidated total income increased to rupees 5,096.7 crore rupees compared with rupees 3,624.7 crore rupees. Q1 sales bookings increased 4% year-on-year to rupees 4,630 crore rupees. The company is targeting rupees 24,000 in annual sales bookings and around rupees 4,100 crore rupees in net profit for the full financial year. Next is Blue Dart. The company is preparing to launch a dedicated cross-border e-commerce delivery service as early as next month. The initial focus will be on major markets such as the US, Europe and the UK. Blue Dart plans to leverage parent company DHL's global last-mile network, airline partnerships and its own air and ground fleet. The company expects cross-border e-commerce to become a meaningful revenue contributor over the next 5 years. Recent policy changes are also supporting this expansion. The government has removed the 10 lakh rupee per consignment value cap for commercial courier exports from April 1, improving export opportunities for MSMEs and smaller online sellers. Blue Dart is also targeting the number 1 or number 2 position in the express ground segment. Next is NIBE Limited. The company secured the L2 vendor share of a contract worth approximately 563.35 crore rupees from the Indian Army. The contract is for supplying the Vayu Astra loitering munition system. The order was awarded under the fast-track procurement route, highlighting the armed forces' focus on faster induction of combat-ready defense systems. Vayu Astra is a man-portable, precision-guided loitering munition designed to engage high-value targets. The order provides meaningful revenue visibility for NIBE's defense business. Through its subsidiary NIBE Defense and Aerospace, the company manufactures missile subsystems, counter-drone solutions, unmanned aerial systems, and precision components. And finally, Ola Electric has expanded beyond its traditional electric two-wheeler business. On August 15, 2026, the company launched its dedicated battery energy storage system or BESS product portfolio for the Indian market. The portfolio uses Ola's capabilities in battery cells, battery packs and energy management systems. The company is targeting multiple segments: residential energy storage for homes, commercial and industrial customers requiring larger systems, and utility-scale applications for grid operators and renewable energy projects. This move significantly expands Ola Electric's addressable market beyond electric mobility and into the growing energy storage sector. Now let's move to the quarterly results announced after Friday's market close. First is Cochin Shipyard. Only revenue improved on a yearly basis. The remaining key parameters declined on both quarterly and yearly basis, while margins also declined sharply. Overall, the results were weak. Next is Patanjali Foods. The only negative factor was net profit and net profit margin declining on a quarterly basis. Apart from that, the remaining earnings parameters improved. So despite the quarterly decline in net profit, overall the results were good. Next is Voltas Limited. Revenue was the only major negative factor on a yearly basis. The remaining parameters improved strongly and margins also showed good momentum. Overall, the results were good. And finally, NMDC Limited. Revenue, EBITDA and net profit improved slightly year-on-year but declined sharply on a quarterly basis. Margins improved quarter-on-quarter but declined year-on-year. For a heavy manufacturing company, some quarterly decline was expected. However, there was also no major improvement on a yearly basis. So overall, the results were weak. And that's all for today's pre-market report. Now I want to know from you, which company are you tracking the most from today's updates? And also tell me in the comment section, which company's results you want me to cover in today's post-market report? If you found this video helpful, don't forget to like, share and subscribe to Stock Market Meridian. I'll see you again this evening with today's post-market report. Thank you for watching. Signing off, Jai Hind.